Okay, greetings. David Kirsten here with the next episode of Industry Leader, and I have a favorite mortgage broker of mine and networker, Cheryl McCarthy, on with Mutual of Omaha. And Cheryl's just a great person to know in this industry because she's so experienced, and she also really knows a lot of other things going on in the industry. So, with that, I'm actually going to keep my kind of intro very brief and just get right to Cheryl. And that's kind of the beauty of a one-on-one conversation here. Cheryl, how first want to say, how are you today?
Oh, David, thank you. I'm doing great. It's a beautiful day and not too much smoke, and we're good to go.
Oh, sounds good. And I know this is a question we're familiar with from our networking chapter. We're actually in the same business networking chapter as one of the top chapters in Oakland, and about this concept of your story and kind of like who you are and kind of where you came from. If you don't mind just sharing that with our viewers.
Oh, terrific. So I've been around a long time. I'm originally from the East Coast, landed in California in 1980 and haven't left. So I've been in banking and finance for over 30 years in a number of different roles, including management, commercial and mortgage lending, private banking, and business banking. And then in 2015, I left a major bank to offer reverse mortgages exclusively. So I call this my last and best job. I get to help customers every day and I get paid to do it. So it's very fulfilling.
Perfect. And could you just tell us well, we're going to get to some more of those details in a second, but I about your business and your ideal client, but I actually like to first kind of do a regroup on just where we are in this housing and mortgage market. It's really been a crazy time here in the Bay Area and a lot of places. Could you just tell us what you're kind of seeing out there in the mortgage market and the Bay Area real estate market?
Yeah, it's been crazy, like you said. And pre-pandemic, we thought it was crazy. And then during the pandemic, it got even crazier. So what's contributing to this is incredibly low rates for mortgages, increased demand, both in the cities and now out of the cities, a seller's market, which I'm going to talk a little bit more about, and really a big delay in appraisals. And that's because there are fewer and fewer appraisers out there. There's such a huge demand with purchases and refinances because of the low interest rates and because people are moving. So when I said at the seller's market, we might be seeing a change. We're starting just talking to realtors in the industry and in the Bay Area specifically. We're starting to see that heated market maybe cool down a little bit, where it's not going for extraordinary amounts over asking. So I think we're coming into a change, but some of the crucial things, appraised values and low interest rates are making this a really, really dynamic market. And
Okay.
specific, and then I'm going to talk a little bit too about specific to reverse mortgages. So what I'm seeing in the market for reverse mortgages are baby boomers are now starting to retire. So that's a huge generation, a huge population shift coming into retirement. And the pandemic has made people retire earlier than they thought they were or have a big loss of income. So I'm talking to a lot of people in their early 60s that didn't expect to retire now, but maybe they're self-employed and their businesses have fallen off, or that they actually were laid off. Some of these clients have gone into forbearance, which is ending soon for most of them, if it's not already ended. A lot of the clients are moving closer to family. So what the pandemic did is made people realize what they're about, where they want to be. They want to be close to family in a bigger home sometimes. Sometimes people want to stay in place and do some remodeling. And also because of the low interest rates, I'm seeing a huge demand for refinancing of existing reverse mortgages. So doing a lot of refinancing of existing.
Perfect. And often a key theme of this show is really about the people, the representative, but also the business. And I really see Mutual of Omaha as a industry leader in this field. Could you just tell us a little, for people who may not know the importance of having a viable mortgage company behind you, why that company is so unique and why it's really a top leader in the industry of mortgages and reverse mortgages as well?
David, you bring up a great point. Why is it good to work for a great company? The name recognition, first of all, the Mutual of Omaha Insurance has been in existence since 1909. And you may remember the Wild Kingdom show, which I have in my background here, where in the 70s and some part of the 80s that they would be doing Wild Kingdom and off into the wilds and wrestling alligators and stuff. But specific to reverse mortgages, Mutual of Omaha is one of the largest lenders in America. We're licensed to operate in 48 states, and our management and expertise is in reverse mortgages. So we're keyed to doing that. It's unlike other lenders that maybe have a couple of people that do reverse mortgages. Mutual of Omaha Reverse Mortgage is all about reverse mortgages. We do have Mutual of Omaha Mortgage and then Mutual of Omaha Insurance, but Mutual of Omaha Reverse Mortgage is specific to reverse mortgage. And what that means is that all I do every day is reverse mortgages. I don't do other conventional loans or any other loans but reverse mortgages.
Great. And I was just reminded of the analogy. I think it was Jesus who said, if you build your house on the sand, it's not going to be stable. But if you build it on the stone, then you're going to have a house that can withstand the storms. And I see that in Mutual of Omaha. I know their practice is with leveraging and is totally different from a lot of the other banks that are highly leveraged. Could you just comment on that real quick? Because that was
So one of the great things about being a mutual company, Mutual of Omaha, is that the management and its big success is long-term thinking. We're not quarterly thinkers. We don't think month to month, sales results day to day, like some other industries have to. We could take long range views. We're well subsidized or well funded, so we can take those positions and we can grow our company, including the reverse mortgage business, because of that long range view.
Great. And I know some people may not be familiar with the reverse mortgage, or maybe it's a baby boomer just retiring, or maybe a reverse mortgage makes sense for them, but they have no idea what it is. And I think there's some disinformation out there that sometimes they get a negative connotation from maybe some of the representatives who aren't kind of as maybe knowledgeable, or I don't know what it is, but could you help us just clear up kind of what a reverse mortgage is and why it's actually can be a very hugely beneficial thing for a lot of people out there, even though they may not know it?
I sure can. And you brought up a lot of good points. Well, first of all, reverse mortgages have been around for a long, long time. But in the late 1980s, it became a government insured loan. And that's because of maybe some of the abuses or some of the practices that in the past. What I mean by that is when you mentioned that it has a negative connotation, and that's a lot for the older clientele, that they've been around, they've heard things, and they really don't know, but they just know that don't get a reverse mortgage, you'll lose your home. So in the late 1980s, it became a government insured loan, just like first-time home buyers or veterans home loans. Those are all government insured loans, and we just call it the third leg of that stool. And this allows clients 62 and older to age in place, to use some of their home's equity today and not have to make a mortgage payment. So I call it the best loan ever, because what other loan do you know of that you can get where you don't have to make a monthly payment for as long as you live in the house as your primary residence? We don't look at what conventional lenders look at, which is, you might have heard debt to income, where they look at how much income you make and how much debt you have and whether or not you can qualify for the loan. The other thing we don't look at is FICO scores. So some lenders will say, oh, you have to have a minimum of this, a credit score to get a loan. With us, with a reverse mortgage, what we look at is that after we give you the reverse mortgage, Do you have enough money to maintain your household, live in your house, turn on the lights, feed yourself? Do you have enough money to pay your property taxes and insurance? And if the answer is no, we carve out a piece of the reverse mortgage and say, okay, now can that work for you? So what that does is it eliminates mortgage payments in retirement. So you mentioned baby boomers. A lot of baby boomers really don't understand about reverse mortgages, but once they do, I get phone calls now as soon as somebody turns 62. And the reason why is it's a loan like any other loan, meaning you can pay it off at any time. You're the only one on title, but you get to choose if and when you make a mortgage payment. And it doesn't take other assets to do it. So if you have a mortgage payment today, you have to make enough money every month after taxes to make that mortgage payment. Well, if you didn't have a mortgage payment, what could you do with that money? You could save that money, you could invest that money, you could maybe retire. And so that's why a reverse mortgage, so that's the big difference with the reverse mortgage. So about 2018, we rolled out with in addition to the FHA insured, Federal Housing Authority insured home equity conversion mortgage, that's a mouthful, so we call them HECMs. That we rolled out with a jumbo product. And what a jumbo product means, or a jumbo proprietary reverse mortgage, is we can lend you more money. Where the FHA loan, we cap out at $822,000. With the jumbo, we can go up to $4 million in a jumbo loan, not having to make a mortgage payment. So that's huge. So I recommend it for now. Why people look at it today, just like any other loan, rates are low. We give you more money. The sooner you set it up in retirement, the more benefits you get. And it can be used as financial strategy.
Great. And you actually just set up my next question, or you almost half answered it, about why is the time to strike now on this? I really think you mentioned this pivot in the market, and I really, I'm a numbers guy, but I'm going to let you tell us, why you should take action now versus waiting 6 months on a reverse mortgage.
Perfect. Thank you for leading into that. That's great, David. So why now? Rates being as low as they are. When they're low, that means I can lend you more money. How much money I can lend you is dependent upon three things: the interest rate, the age of the youngest homeowner, and the appraised value. So if appraised values are up, which they are today, but they might not be tomorrow, interest rates are low, I'm able to lend you more money today. If you set up a reverse mortgage early in retirement, you can use this, you can access the money in a number of different ways, but one of the ways that you can access it is a line of credit. And that line of credit can be used in conjunction with your other investments as a financial planning strategy. So if the market is going down, rather than taking from the stock market, you can take from your home equity conversion mortgage or your reverse mortgage. It gives the market a chance to recover so you don't take a loss, and then you can start pulling back from the investments. So it's a great tool for people to use. The sooner you set it up, the better it grows for you. And like I said, you can refinance at any time. You can pay it off at any time. There's no downside to setting it up now, but there is a big upside.
Perfect. And I know I was telling you before we got started here that I feel like your answers are the perfect length for podcasts. So I don't know if you've ever thought about retiring in broadcast media, but you've just been very succinct and to the point. And if you're looking at going on a podcast out there, maybe one of our viewers, I just love how you break down these concepts so succinctly, like kind of like one of those old gunslingers out in the West, straight and quick, so
I've been told I've been a little bit direct.
Beautiful. I knew there was a reason why we connect so well. So, I just wanted to end with this, and I will give you a chance to make a closing statement if you want, about who are you looking to work with out there? Who's your ideal client out there?
So it's interesting because my ideal client is twofold. One is the customer themselves, the direct consumer. So I always say 62 and older because that's the FHA insured loan. You need to be 62 to get it. But with the jumbo, we're going as low as 60. I don't want to muddy the waters, but so if you're over 60 and you own a home over $1 million, you can always call me to review and run a scenario for you. And by the way, David, I do that all day, every day. I run scenarios for people all the time to see if it makes sense for them to refinance from their existing mortgage into a reverse mortgage, or if they just want to purchase a home with a reverse mortgage, which you can do, and that's very exciting. But then my real ideal clients is the ones that are dealing with customers on a daily basis. So financial advisors, they love, once they get the concept of using the line of credit in conjunction with their investable assets, most people's, the majority of their equity is in their home. You know, think about it, over 60% of your equity of your retirement is in your home. So financial advisors are a big clientele for me. Bankers really see a lot of my customers on a daily basis. Sometimes they're declining customers for loans that are over 62 that I could help, because I don't look at debt to income and I don't look at FICO scores. I look at how they can benefit from the reverse mortgage. The other people that really refer to me is mortgage consultants. Mortgage consultants refer to me because they know they're declining customers that would fit with my loan. And this is a cautionary tale. Be very careful of brokers that say, oh, sure, I do reverse mortgages. Like when rates are down, they're doing a lot of refis. When rates start going up, everybody becomes a reverse mortgage lender. And that's not the person you want to do your reverse mortgage. You want someone that does reverse mortgages and only does reverse mortgages. And lastly, one of my biggest referral partners are realtors. So realtors are dealing with customers that are selling, you know, especially baby boomers that are either downsizing or right sizing. And by right sizing, I mean, they're not selling their big home for a small home. They're selling their big home for a home that better fits their retirement needs. Or sometimes they're moving into a retirement community like Rossmore. So realtors are also a big clientele for me. Make sense?
Yeah, well put. And I do see that as a key concept on Industry Leader, that in order to do anything really well, that has to be your specialty. So I love how you called out some of these folks who are kind of all of a sudden sell you some beachfront property in Nevada and can do a reverse loan for you.
Exactly.
So I just find that you have that quality about when you're an expert at doing reverse mortgages, you can have their best interests at heart, and you know how to do it, because it's complicated stuff, especially to convey that to somebody. So you really need somebody who knows the numbers. And I really see you as such a wise business person, and you see that in your experience and in our business networking chapter, and also just you're not shy about the numbers, and you always kind of know what you're talking about with the numbers. So I really appreciate that, being a numbers guy myself. So.
Yes, you are a numbers guy. And thank you, David. Now I have a big head.
Well, I wanted to end with that, and such a nice time with you today, Cheryl. And I think it was a great segment. So thanks for coming on Industry Leader to share your story and tell us why folks should use you out there for reverse mortgages.
Well, thank you so much, David. And I really appreciate the Industry Leader podcast. Good stuff. Good people.
Thank you so much. Bye, everyone.
Thank you.